have also stuck to your knitting. You've had a lot of opportunity to deviate. You haven't. But has this paid off for you in hindsight? Would you do anything differently?
Well, I certainly wouldn't take 21 years to figure out how to put retail in there. Listen, I love this conversation. The one thing I will say about this that's just really important is development's hard, and things go wrong, and it goes wrong in all parts of it. If you haven't picked the right piece of real estate to start, you're dead. If you have picked the right piece of real estate and things go wrong, you can make it up in time. Rents will go higher. It will be successful. It can grow, even if you screwed it up early on, and I know that because basically I have this job because we screwed one up in 1999, 2000, and 2001. It's one of the most valuable assets we have today. But it took a very long time, and with those original errors, the market was able to bail it out. And that's in San Jose, California. If that were in a secondary or tertiary market, it would have probably sunk the company. So I do think high quality and location really is the secret sauce to whether it's development or operations or any facet of real estate. Let me answer your question. I'm not sure what it was, Guy, but let me try on one of them. You know, every company, whether you're private real estate, public real estate, technology, wherever in the world, needs a reason to exist. And I think it's really important that every company, and certainly from a student perspective, where you go to work, you make sure you understand what that company's reason to exist is. What is the product that it is selling, and can it be advantageous with respect to its competitors? Why would investors choose you? And Federal's been around 50 years. It's been around one of the oldest REITs in the country. And for a long time, this business was very different than it is today. Much less competitive, frankly. It was a much smaller segment of the investor population. And we grew very lax in terms of what we were doing. And we got into development, we got into a lot of things in the late 90s, and frankly, we lost our way. So the idea was to say, well, okay, why are we here? What's the reason to exist? And very simply, and this is exactly with where Ron started this day, we believe that what our product is a steady, increasing stream of cash flows that, in a very cyclical business, can't be derailed by any one or two particular risks to real estate. And if you think about, well, okay, that's your business, because what I want to be is the most boring guy in this room.
Well,
I want to make sure. Best I can.
You were at dinner last night, too.
I want to make sure that from an investor's point of view, all they're really talking about is whether they're overweight federal or equal weight federal, and not whether to be in federal or not. And that's the goal. And when you think about it, you say, well, all right, how would you do that? It comes to every single decision that we make. Now, Deb said it right away. You got to play the hand that you're dealt, and no question about it. I was dealt a very, very good portfolio to start with. The point from there, in terms of how to keep cash flow increasing every year, is all about balance. And this is what we were talking about at dinner last night. Development, but to a small portion of what it is that you're doing. Acquisitions to a small portion of what you're doing. Operating expertise, which I don't think, frankly, Mike, everybody does do well. I think there's a lot of nuance in operations that make or break it. The bottom line is, what's not been talked about in this room is, in terms of real estate, the first thing you have to ask in any real estate decision is, what's your time horizon? And early along the way, there's a lot of ways to make money playing the timing of the market. We just don't believe we can do it. We're not good at that. So if you're not good at that, and you're going to look at everything with a long-term focus, it helps to guide your decisions. It certainly guides your decisions as to whether tenants make up a disproportionate share of your income. That diversity is really, really important. Leverage, as Mike says, it's critical. You know, we picked a cyclical business to be in. That's what we're in. There's going to be a trough, and there's going to be a peak, and you don't really know when that's going to happen. Low leverage is just an important part of producing a steady stream of increasing cash flows. It's just critical.